So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha, and welcome back to The Daily Call. Today we're going to be talking about why target date funds are a scam, and I want to explain the reasoning behind that. So the reason that I say target date funds are a scam is because what target date funds do in theory sounds rational and logical. They're going to basically rebalance your portfolio on an ongoing basis as you approach some target date, potentially retirement, potentially the end of your employment, of some target date in the future. So for example, when my wife was a teacher and signed up for her benefits package, one of the things that the person who was suggesting benefits for her said, you need to, put yourself into one of these target date funds because you're going to be retiring in 30 years. So when you retire in 30 years or 20 years, whatever it was, you're going to want a different mix in your portfolio. And again, this sounds logical and reasonable that would happen. So her target date fund would start investing most of the capital in her account in stocks and very little into bonds. And then over time, it would start to change that allocation. Maybe the initial allocation is 90% stocks and 10% bonds. And then after 5 years, it starts to adjust down to 80% stocks and 20% bonds, et cetera, until you reach the target date. Now, the problem with these target date funds is that they generate massive fees for trading and rebalancing the portfolio. And that's something that people don't feel. So you actually don't feel those fees, but they're actually attached to practically all of these target date funds. So when you get into a target date fund, although rationally makes sense, what they're basically doing is death by a thousand cuts. They have this ability to adjust the portfolio and remove and exit a position only because of the date, not because of some intrinsic value or some trend or momentum or quantifiable measurement as to why they should be exiting stocks and buying bonds. There's nothing like that. It's just purely a time and mechanical issue. And so when they start exiting one position, they incur trading fees and reallocation fees, and then load fees, front-end load fees, back-end load fees. All of these fees are just kind of wrapped up in this allocation of rebalancing the portfolio on an ongoing basis. And so what you see is that not only do these target date funds charge an initial expense premium, but you have these underlying kind of not felt expenses through the reallocation of funds as you get closer to that target date. So it's my opinion that I don't think that people should do this. I think that target date funds are something that is going to be, or things that are going to be moving very quickly in the future to their eventual death in this industry. And I think on the other hand, what people can do is just more appropriately manage their own portfolios or use an automation software to manage their own portfolios with low or no expense ETFs. And then have the ability to buy and sell those low or no expense ETFs, potentially in a brokerage that also charges low to no expenses as far as commissions. And you can completely replicate this type of system and framework, potentially on a better timing method versus just randomly buying or selling based on timeline, and actually get better performance because of lower fees. So hopefully this helps out. Hopefully it helps you just reconsider potentially if you have these. I did not let my wife get put into a target date fund when she signed up for her Roth 403b as a teacher. I was not definitely going to let that happen, but it was a good pitch by him, and I wanted to talk about it here. So hopefully this helps out. As always, if you guys have any questions, let me know. And until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.